Chinese enterprises dominate Mexico's industrial real estate market, surpassing previous records. In a groundbreaking development, Chinese enterprises are making waves in Mexico's industrial market, marking their best performance to date. Their investments have exceeded $300 million in the first half of this year alone, surpassing last year's impressive figure of $400 million. This surge in Chinese investment has positioned China as the second-largest foreign contributor to industrial real estate occupancy in Mexico in 2022. S2LA, a leading provider of real estate market data in Latin America, has keenly observed the rise of Chinese companies in Mexico and identified several noteworthy trends. Let's dive into the details. Trend 1: Exponential growth of Chinese investment in Mexico since 2021. Chinese investment in Mexico has experienced a remarkable surge in recent years. Even before the pandemic, there was a noticeable increase in monetary flow compared to the previous decade. Though the global health crisis did lead to a temporary reduction, the inflow has consistently remained above $100 million annually. However, these inflows have undergone exponential growth since the previous year, surpassing the $400 million mark. Trend 2: China emerges as the third-largest occupier of new industrial spaces in Mexico. Chinese firms have now secured more industrial spaces in Mexico than their German and Japanese counterparts. Ranking third behind American and Mexican companies, Chinese companies occupied 5% of newly delivered industrial facilities in 2021, and this year, they have already claimed 10% of new deliveries. Trend 3: Chinese investment focuses on Mexico's key industrial hubs. Chinese enterprises have concentrated their investments in select states, with Chihuahua and Nuevo León in the north, Jalisco and Guanajuato in the Bajío region, and Mexico City, along with the state of Mexico, in the central area emerging as the preferred destinations. Contrary to assumptions, Mexico City has seen a significant influx of Chinese investment, while Chihuahua and Nuevo León dominate the bulk of this investment in the northern regions. Trend 4: Manufacturing companies lead in industrial space occupation. Chinese enterprises entering Mexico primarily hail from the manufacturing sector, with a focus on capital goods, vehicles, and parts, and electronics. This industry alignment further indicates their strategic market presence, potentially hinting at an influx of more Asian companies due to the nearshoring phenomenon. While this analysis spotlights Chinese firms, it's important to note that Mexico is attracting businesses from various Asian and global regions. The country's strategic proximity to the United States, the world's largest economy, coupled with the disruption of global supply chains, rising costs, health crises, and geopolitical tensions, make Mexico an ideal investment destination. However, challenges such as limited space availability, skilled labor demand, and deficiencies in essential services like water and electricity exist and need to be addressed. The trend of nearshoring from China to Mexico is not arbitrary but rather based on regional opportunities created by the USMCA and the economic climate. Mexico has become an increasingly attractive option for Chinese companies looking to diversify their supply chains, reduce operational costs, and maintain proximity to the North American market. The concentration of Chinese investments in northern Mexico's industrial markets, including Monterrey, Saltillo, and Tijuana, will likely continue driving growth and expansion in the region's commercial real estate market.